Welcome back to Metals, Money, and Markets. We're at June 29th. From MiningClips.com, I'm Rob Goodman, and as always, the Mercenary Geologist, Mickey Fulp, will run us through the numbers. Oil's the big one this week, Mickey, but let's go ahead and start over in the metals here. But the theme kind of remains the same here. Metals off again this week.
Gold continued to slide despite the ups and downs of the U.S. dollar. Closed the day at $12.52, down $17 for the week. That's another seventh-month low. But yesterday it dipped to $12.46, so I saw a little bit of rally today. Silver dipped below $16 yesterday, barely made it above that today. It closed at $16.08 for more than a 2% loss. Platinum lost nearly 3%, closed at $8.52. That's a 2.5-year low. And palladium continues to hang in there. It closed off $5 to $9.48.
And another pretty significant off week for copper here.
Yeah, copper's lost 9% over the last 2 weeks. Closed right at $3 for a 2.7% loss. This is its low since early April. It's really about the trade war, and that equals a risk off, especially in the metals space. And also, there's been no supply disruptions this year. We've got Escondida and Chuquicamata labor negotiations pending, but the market's been surprised by that. And likely because of that, it's in 6-month backwardation now, well into 2019.
And head over to the energy markets here, where oil, another big week here for oil.
Yeah, black gold's really the big story. 3.5-year high at 74.30 for a 7% gain over the week, and nearly a 15% gain over the last 2 weeks. One thing that's encouraging to me is oil often leads other commodities. So we would hope this is going to spread into precious and base metal space as we get toward the end of the summer. U.S. production's flattened out now at 10.9 million barrels a day. Inventories, this was big news yesterday. Inventories, a whopping 10 million barrel draw. That really surprised the market. Meanwhile, rigs are down 5 as the Permian Basin reaches its pipeline capacity. But really what's happened, OPEC came up with these million barrel cuts a couple of weeks ago, but that's been more than replaced from the decline in production in Iran with sanctions coming in, Libya, terrorism, and Canada had a big synthetic crude oil sands mishap at one of their refineries. So that's knocking total of 1.2 million barrels off the market, at least temporarily. Here's a good one for you. Argentina, with its socialistic, populistic government, whatever it's been, Peronist, we know that, is instituting oil price controls to stop inflation. And that's going to do nothing more than kill the Argentines' shale oil industry, thought to have the second or third largest potential in the world.
And uranium relatively flat here, nudges up. Heading over to the currency markets, we're a relatively flat dollar, and everything else, loonie benefiting the most.
Yeah, the dollar was up most of the week, but it keeps pushing that 95 plus resistance, and it backed way off that today, down 0.7 of a point to finish at 94.3. The loonie had a good week, finished at 76 cents, and we haven't seen that for 4 weeks now, almost up 1%. I really don't know what that has to do with. Here's one thing I do know, that the Canadians put a bunch of tariffs on American products today, and to ease the burden on higher prices for Canadians through some sort of convoluted idea. They've also subsidized the steel and aluminum industries to the tune of $1.5 billion. So that sounds like higher taxes to me for Canadians.
And we're wrapping up with the equities markets. A pretty rough week, but announcement of some Trump tax cuts rallied them back a bit, but off all across the board.
Yeah, all markets had a down week, including something we normally don't talk too much about, small business index, the Russell 2000. But looking at the big markets, the Dow 24,271 up, off well over 1%. S&P 500 2718 also off well over 1%. NASDAQ, big loser, it's come off its all-time high a couple of weeks ago, closed at 7510, down almost 2.5% on the week. Saw the VIX creeping up to 16. U.S. Treasury bonds have come off that 3% range and down to 2.84%. Not a particularly good week for Wall Street, but certainly that economic news today with the jobs report and additional Trump tax cuts. Also, the Supreme Court today ruled that online sales can be charged sales tax. So that leads to more tax cuts, especially in local and state governments. At least according to Republicans. Democrats are poo-pooing it, of course.
And wrapping up with the Toronto Venture Exchange, where it just gets rougher and rougher here.
Boy, it certainly does. We went well below the 52-week low yesterday at something on the order. I think it touched 729 on the index. Rallied a bit today, but finished at 740 for a 2% loss. There's just no good news. No news is good news, and there's nothing that seems to move this market. So all we can do is wait for Labor Day or after Labor Day. Meanwhile, savvy speculators are going to look at some real buying opportunities in this market. You've got to pick good, strong companies that can survive the downturn. But there's some stocks on sale right now, Rob.
Okay, Mickey. I appreciate the insight. Abbreviated week next week on both exchanges in North America. So appreciate the insight and talk to you next week.
All right. Have a good holiday. I get to participate in both with a long weekend in Canada and then 4th of July. And we got some expats and we're going to celebrate up here in Canada.
Sounds like a good plan. All right. Cheers.
Cheers, Rob.